Hello everyone. Welcome to the video series of Western CPA. We get lots of questions around December, January, and February that how much I should invest in RRSP to optimize my tax savings. So here we go with the three steps process and guide you properly on how to invest. However, before you put money into RRSP, you want to consider following points. RRSP is usually locked investments. So when you withdraw, you have to pay tax again. It's not easy to withdraw RRSP. If you need cash in near future, RRSP may not be the right strategy for you. There are severe penalties for over contribution to RRSP. So you always want to make sure that your RRSP contribution limit is there and you don't over contribute. We get so many cases during the year, they over contribute and pay heavy penalty. And the correction is painful. If your employer is contributing to your RRSP, if they are matching with your RRSP contributions, your contribution limit might be impacted. Please check with your HR whether this is the case. And if it is the case, then you may want to contribute lower to your RRSP just to see what exactly your limit comes up after the year end. All right. So the three steps process, the video should be done in 10 minutes. Step one, find out your RRSP contribution limit. So this RRSP contribution limit for the year should be obtained from CRA. So log into your CRA account or obtain your notice of assessment from the last year. Let's say if we figured out that spouse one and spouse two both have the RRSP contribution limit of 30,000 each. So write down 30,000 based on let's say 30,000 for the spouse one and 40,000 for the spouse two. So this is great to know that they have enough RRSP contribution limit. Now, the step two is identify your taxable income. So when we ask people about their taxable income, they're like, oh yeah, my salary is $100,000 and that's my taxable income. No, that's not the case. Your taxable income could include many other things that are mentioned here. So taxable income, so let's go do it for spouse one. Spouse one is making $125,000. Fine. So we're saying $125,000 coming from salary. He's not doing subcontracting, so there is no T4A. Let's say sole proprietorship business. Yes, he's running the business for 70, and he will have a profit after expenses of $7,500. So that's there. Rental income, yes, they have a rental income of so much, but then after expenses, the net profit from the rental income is $2,500. So the spouse is coming up. Dividend income, no, they have nothing. Interest income is nothing. Investment income is nothing. Capital gain is no, and no other income during the year. So let's say this first spouse is settling down as $135,000 taxable income. The $135,000 with the formula coming up here. For the second spouse, let's say the income is $110,000, for example. T4A, they did some work of mutual fund or whatnot, and then they're making $5,000 there. Mortgage license and mortgaging commission, etc., real estate commission, etc., right? So that's there. Also proprietorship, wherever you can fit that in. And let's say he has dividend income of $2,500 and interest income of $500. Let's go another income. There is no investment in, let's say stock and mutual trading is $2,000. So he's coming to, or the spouse number two coming to $120,000. So this is how the family income is $255,000. The limit for them is $70,000. So now you completed up to $70,000. Sorry, you have a room of 70,000 and you have $255,000 taxable income. The one thing that we haven't mentioned in the worksheet is find out funds or not find out, actually identify funds available for RRSP, funds available for RRSP. So you can see here that you can go maximum $70,000. Out of $70,000, how much you have available to invest? Do you have full $70,000? Keep in mind, RRSP is locked. So once you put it into RRSP, you cannot withdraw it without paying tax again. So you don't want to go crazy and put all 70,000, but if it makes sense for you, then it's fine. Uh, you don't want to invest more than this. because otherwise, if you invest more than your contribution limit, you will be in trouble with penalties, interest, and correction is painful, as I said earlier. So now we are going to go identify RR funds available for RRSP. We are going to say that how much available? Let's say $40,000. Okay, so 40,000 is available that you can accommodate from here and there to invest into RRSP. So these are the things you're set to go to the next steps. With this video, this file is available at the end of the video. You can download it and do your own calculation. So the next step 3, find out your pre-RRSP income tax. So on this income, how much is your tax going to be? Well, you don't know. So you're going to go into this website and open it up in a Chrome or whatever, and you're going to select your province, is Ontario in this case. And then you're going to say that employment, you can be more specific on employment income, self-employment income, etc. But I'm going to put everything into employment income. This will probably yield the same result. So spouse one has $135,000 taxable income. Remember, we calculated based on everything, not only employment income, right? So we are going to go and put $135,000. That will give us the total tax is 42,026, which we are going to put here that 42026. If we don't put anything in RSP, this spouse through income tax deducted, etc., whatnot, this is where they will be getting the tax. I mean, tax is deducted. If not deducted, then it's payable at the end. Now, the second spouse is $120,000. So we're going to find out how much he is or she is paying. Second spouse is paying 35,515 total tax. 35,515. So we're going to put this here, 35,515. So total tax you're paying as a family is 77,541. We have selected 3 options to do this video for RRSP contribution. What 3 options? Bring down income to same level for both. Logically, or most of the time, this yield the best result. It means that both put up the RRSP. RRSP reduces your taxable income. So invest in a way that both spouse are in the same taxable income. That's one scenario. The second scenario is split RRSP investment equally, being 40,000, invest 20 here, invest 20 here. And the option 3 is for you to do the trial and error. So put random amount here and random amount here to come to 40,000 and see whether you're getting any better results. This is your RRSP saving apparently, right? So now we're going to go and make this 40,000 contribution distributed in a way that you both come to the same conclusion. So first thing first, you need to do 15,000 here. So that will bring both at the same place. Out of 40, you're putting 15 there. You still have 25 remaining. And now you can give half to each one of them. So plus 15,000 and plus 12,500. So that will bring you to 107,500. And for the second spouse, you're going to do 12,500, which will remember your available fund 40,000. You're distributing in a way that both of them are coming to the same taxable income and no one pays higher tax than other. So now you're going to go and in our income tax calculator and find out that on 107,500, how much is the tax? So 107,500. This means that both spouses will pay $30,089. Let's go there, 30089. And then another spouse will pay the same amount, 30089. So that way, if you put 40,000 in RRSP by bringing both of your income, both of spouses' income to the same point, your savings is 17,363. Fine. Now some people say that why don't I rather put 20,000 into RRSP and for each? Simple as that. 40,000 distributing equally. So great. Let's go and check taxable income, 115,000 now. So we are going to go here and say how 115, how much is the tax? So tax is 33,344. So we're going to put the tax amount is 33,344. For the other spouse who is now at $100,000 taxable income, he will pay 26,880. 26,880. So in this option, you are saving 17,363 by putting in money 40,000 into RRSP. But option 2, splitting equally, you're getting 17,317, about $40 lower than this. But almost same in a big scheme of things. So you can take option one or option two. Option three is for you to play around. Let's say I want to put 30,000. I mean, you come up with any crazy amount for that matter. $30,000 for this guy and 10,000 for this guy. Let's see. So in that scenario, 105 and 110 is the income. So 105 and 110 is the income. We are going to go here and check how much would they pay on 105,000. 29,003. So we are going to say that income tax is 29,003. And on 110,000, how much the other spouse is paying? 31174. 31174. So your tax savings is, look, very similar to in the first option, 7364. We just randomly try. But you can do either way. You can say that I just want to give 10,000 to this guy and 30,000 to this guy. So now you have to find the new tax numbers for 125 and 90. Let's do that. 125,000, 37,685. So I'm going to put 37,685 here. And then on $90,000, how much tax is there? 23,488. 23,488. So your savings is 16,368. So now you realize that no, this is not the right option because the maximum savings is here. So once you figure out, option three is for you to play around. Option one is what we prefer, bring down income to same level for both. Not necessarily that this option will be optimized all the time, but 90% of the cases, this will give you the better result. That's why, because this is not the proven truth, depending on what tax bracket you fall in, that's why we have option two, where you can split equally and say that what is happening there. And option three is for you to play around. And you know what? Do whatever amount and try as many method as you can here. Um, if you can beat this amount, then why not? So these are the guidance that we have. Again, very important contribution limit, you have to have that. Our file is also designed that instead of this, for example, you're putting all $40,000 in here and you're saying zero here, it will give you error right away. That no, it will not give you savings because you're putting more no, higher amount than your contribution limit. So, but we don't guarantee anything here. So you have to be very careful with this is correct. Also making sure that your employer is contributing to your RRSP. And the most important thing is that you're also including everything in the income and not making the generalized guess. So this is for your experience and for like light check. If you need expertise and if you want to book a session, we provide paid consulting to walk you through your scenarios. You can book a time with us or your investment advisor. This is general guidance that can give you general guideline of what is the best scenario for you. Again, option one should usually yield best results of savings than other options, but you can try and figure out things. This is just for your convenience and to save time for us during the busy season because everybody's asking same question. How much is my savings and how much should I put in RRSP and how much in my RRSP and whatnot? You can do all this play around here with this website, finding the tax rates and tax amount, and then make your own decision. Again, you're most welcome to book a time and obtain the paid consulting for this. The file will be available at the bottom of the video for your download and you can play around with that. Thank you for watching and hope this really helps.